Thank you, everybody. Glad to see the hardcore risk takers have remained for oil and gas. And apologies for having to reschedule the meeting, but very good reason. We have our morning operations call with BP and Cosmos every morning for the well we're currently drilling offshore Morocco. And unfortunately, guys, that takes priority because of the cost of the well and the fact it's BP. Skipping over to this first slide on Morocco, the first thing I'd say is that we're focused on Morocco and Ireland, and we're focused there for a reason, because we saw opportunity here from the point of view that these were underexplored areas, had good geology, had found bits and pieces of oil and gas before, and that had been looked at by the majors many years ago, but before substantial amounts of 3D seismic were shot there. So it gave us an opportunity to get in early and try and promote these areas. Second major factor is that both these countries, Morocco and Ireland, have gas interconnectors with Europe. Ireland has 3, Morocco has 1. And I'll come back to that in a second. And the 3 core areas are offshore Morocco, where we're partners with BP, Cosmos and SK, the Koreans, and I'll explain who SK are shortly, because most people have never heard of SK. And onshore Morocco, where we're looking at a large gas appraisal project, and then Celtic Sea offshore Ireland around the Kinsale gas field infrastructure. Why those interconnectors are important, particularly at this point in time, you'll have seen that there's a big problem brewing between Ukraine and Russia, which is now involving Europe and the West. And it seems like just a simple political problem. But I recently met the Deputy Director of Gazprom in London. He made quite an interesting statement. He said in 2008, Gazprom supplied 32% of European gas. Currently, they supply 30%. And it would take them 8 years to recover that additional 2%. So they're now focused on Asia, LNG, no longer focused on Europe. And maybe therein there lies a clue as to why Russia is taking such a strong attitude with Europe and America at present. For sure they have legitimate reasons in their eyes, and for sure the West has legitimate reasons. But the key thing is that Europe can no longer necessarily rely on Russian gas to meet all their needs. So we're back to the security of supply issue. Now, please don't think that shale gas is going to fill that vacuum in the short term. To put it in perspective, Kinsale gas field in Ireland at its peak was producing 300 million cubic feet of gas per day through just 14 development wells. And it's been producing for 36 years and it's still producing today at 19 million cubic feet a day. To get that volume of gas from shale gas would take over 1,000 wells at least, and workovers and continued drilling over that 36-year period. So please don't think that shale gas is going to fill the short-term crisis that could erupt if the security of supply from Russia is interrupted for any reason whatsoever. And that's why we focused historically a couple of years ago on Morocco and Ireland, because of the fact of the links to the European market. We saw that gas was a commodity that you get a good price for and was politically secure in terms of competition with Russian gas. I'm not saying we predicted what happened or what is happening, but we always foresaw that security of supply for Europe was more likely to be satisfied by its closest neighbours in the different, off to the west and to the south, perhaps in North Africa, than it was from Eastern Europe. Moving on to the management team, we can honestly stand up here and say that we've been there and we've done it. Myself, on a small scale, I've set up 3 companies, built portfolios, sold them on at a significant profit to what was put into the company. And all those companies were small shareholder companies, initially with 25 shareholders, so it wasn't a PLC company. Also successfully drilled 4 wells offshore Ireland, each flowed 19 million cubic feet of gas. So we don't have anything to prove in terms of that part of the track record. Carol Law, obviously with Anadarko, has with Anadarko proved up 100 TCF of gas in East Africa, where nobody thought gas was ever going to find a market. That
Currently, 10% of that was sold by Anadarko for $2.64 billion. Capital Friel is was involved in Merian Capital and sold that on for 100 million, and has been involved in a large number of corporate finance deals, the value of which is seen there. And of course, Michael Nolan was ex-director of Cove Energy, current director of one of the subsidiaries of Cove Energy, and obviously Cove is a story that everybody knows. So when we put this board and team together, it was for one purpose only, to create a value, an exit value through a trade sale, not through necessarily the stock market. As we've seen at present, the market is relatively down, to say the least, for oil and gas stocks. But if you manage your assets well, you keep them in the good stead, and most importantly, keep cash in the bank, then you're not reliant on the market to support your fundraising. All our funds come from our farm out deal, which we are concluding as we speak with SK, and from cash that we already have in the bank. So we are fully funded for the next couple of years for our program. We also have a team there, but I'll skip over that. Moving on quickly to Tendrara, the onshore permit. Tendrara, the market doesn't understand Tendrara because we have not yet given it the same full-blown news flow treatment as we have to some extent on Fumasaka and also offshore Ireland. That will change over the next few months as we crystallise our plans there to drill later this year, and potentially also to bring in a partner to help us drill more than one well in the coming few months, 12 months. And the reason why Tendrara is important is because it's proven gas, so it's completely de-risked. The wells have flowed gas. The issue there is to get them to flow at higher rates by applying modern technology, modern practices, etc., which we are comfortable that we can do, but of course we won't prove it to the market until we actually do it. But in terms of value, Tendrara offers us a huge amount of value, as you can see, roughly about $2.3 million per BCF of gas, so around about $8.50 an MCF of gas, because they get European gas prices. So every BCF we find, there's significant value in a development. And the first well is designed effectively to test the TE5 structure, which was already producing gas, on test a little bit further up dip to prove up sufficient gas for a first stage development, which will allow us a trigger point, if you like, to look to an exit route over the next 12, 18 months to a player, an industry player who wants to build a gas position in Morocco adjacent to Europe under very favourable fiscal regime. And in that respect, 1 barrel of oil in Morocco is equivalent in value terms to 13 barrels of oil in Algeria and 7 barrels of oil in Nigeria. So you can see that although it's higher risk, the rewards are substantially higher in terms of commerciality compared to those two entities. I won't bore you with the technical details other than to say that there's a very strong 3D seismic here already exists, that there's a well that was put on extended test that flowed the gas for 3 months. All the ingredients are there for a gas development. We have a partner there is the major financial institutions in Morocco who would help fund a gas development. Not that we're in the development strategy, but it helps if you want to sell on a project to have those sort of partners involved in the project. And of course, the most important thing is that there's an infrastructure link with Europe that has capacity rights for Morocco. Morocco is seen as a very safe haven for Europe at present. It's one of the only countries outside of Europe that has special kind of EU status with Europe, and therefore it's seen as a very important ally and partner in the energy mix going forward in Europe. Turning now to Fumasaka, we started that well on March the 16th. As we guided the market, it would take up to 3 months to drill. It's been drilled as a tight hole, and that's all I'm going to say about it. You won't hear anything until announcements are made at the end of the well. Obviously, we are very pleased to be partners with BP and also SK, as I'll come on to in a second, and Cosmos. And what we're targeting here in the offshore is a play that has not really been targeted previously. Of all the wells drilled in Morocco, 66% of them, plus another 25% of them, were all drilled in the shallow shelf inshore areas, and only 3 wells, 9%, were ever drilled in the outboard area. So in terms of catch-up with the shallow shelf areas, we've got a lot of wells to drill to be able to ascertain what the petroleum systems there are and what the likelihood our big discoveries are, which is why we negotiated a 2-well carry with SK, was to ensure that we had plenty of running room to follow up any success on the first well, and also to follow up any new petroleum plays that came out of the first well. So that's very important to have that 2-well carry. If it was just a single well, then we wouldn't have the running room that we do currently have on the block for an appraisal or an exploration well. That's the prospect. Probably doesn't mean a lot to you other than the little white line there is roughly about 2,000 meters of section that is potentially prospective for different reservoir units, which is why we say the well is going to take up to 3 months to drill, is because that whole section has to be tested before we reach the TD of the well. There are lots of other prospects on the block, so lots of running room. This is one of the major reasons why BP came into this area, into this block, because they did not see this as a one prospect, one structured block. They saw it as a multiple plays, multiple prospects, with lots and lots of running room, lots of different geological play types. And that was also the reason for coming into this area, because obviously they wanted to explore the idea that some of these fan traps, similar to Jubilee, which were being identified on the 3D seismic, had significantly been missed in all the previous drilling, which was only 3 wells, so perhaps not surprising. And this just gives you an idea of the risk involved in hitting and missing these potential sand bodies. So very important to build up the well database. Even a poor well, like Cairns, for example, was important for us to understand where the reservoir might be developed. And similarly, as you build up this knowledge with additional drilling, then you increase the probability of finding hydrocarbons. All wells in this area have found a petroleum system, in the sense that there's oil and gas being generated. So it's only a question of tying down the reservoir. Sorry, I should go back to that one. That's the super duper rig we're using, fully automated. The Maersk Discoverer, quite an impressive piece of equipment. And then just a little bit about SK, because when we announced SK last November, it was all a bit of a rush, and perhaps we didn't explain who SK were, because we were still on a learning curve ourselves. SK are the 3rd largest company in Korea, behind Hyundai and Samsung, which everybody's heard of. They have 56,000 employees. Their corporate annual turnover for the last set of accounts, full year accounts, was $130 billion. It might be getting close to BP's, I don't know. But also they're a fully integrated chemical division refiner. They're Asia's 4th largest refiner, a refining capacity of about 1.1 million barrels of oil a day. They have 19 blocks in 13 countries, including 5 production blocks, 14 exploration blocks, 4 LNG projects, including one in Oman, and they're in Peru, Colombia, Kazakhstan, Libya, Australia, Oman, Yemen, Vietnam, Cote d'Ivoire, Madagascar, and daily production of 70,000 barrels of oil a day and 619 million barrels of oil equivalent. So you can understand, for Fastnet to bring a partner of that size and integrity into this partnership is very important for us for establishing, going forward, a good relationship with a joint venture partner that clearly is of a size that will be a substantial asset to the block and to anything else we do eventually outside of the block. So I think that message did not really get across to the market, in terms that you cannot find too much information on a website or on Google about SK. But if you dig deep enough, you'll find all the details of what I think is South Korea's best kept secret. but certainly a very sizable company and a great partner for Fastnet to have, and it was Fastnet that brought them into the license. I'll skip that and move over to Ireland. We have taken a deliberate policy to downplay Ireland, as you might have seen over the last 4 or 5 months. We've cut back the news flow on Ireland drastically, and the reason for that is we felt that Ireland got overheated last year with the Barry Rowe situation, that adding news flow at that time would have been counterproductive, because unfortunately Barry Rowe hasn't progressed yet to a farming partner being signed, sealed and delivered. And the other thing we wanted to do was make sure we push ahead with our 3D seismic in processing interpretation, which we've done. We will update the market shortly on the initial results of that, and shortly after that on the final results of that. But suffice to say that the 3D has formed the catalyst over the last 6 to 7 weeks for us to go out again to the industry. And the interest we're receiving now is from super majors, whereas last year it was from junior cap, mid cap, and what I would call junior majors. So we've moved it on to a level, because we now have the 3D available, which we didn't have last year, that we could never have done last year without the 3D. One other important thing to note last summer, was that for once I'm doing actually quite well on time, which is amazing. Last year, Statoil made a very big discovery in Flemish Pass, 600 million, up to 600 million barrels recoverable in summer 2013, down there off eastern Canada. And that was also a great trigger for the industry to think about Ireland again, because Ireland was seen as the mirror image, if you like, of eastern Canada, what we call a conjugate margin, when we put the plates back together 200 or 300 million years ago or whatever. Our licenses in the Celtic Sea were secured long before that discovery was made, and we secured them in 2012. And again, we focused on one basic principle, that in order to attract a major into the Celtic Sea, you had to have materiality. You had to have big prospects. Arm waving is great, but unless you could demonstrate the potential for big prospects, then the industry won't come in a big way. It's just not material for them. And the second thing, which was most important, was in order to get that industry in, you had to lift the technical base in the area by shooting 3D. So we took a quite ballsy decision to spend $20 million on 3D last year in order to get that uplift to the stage where we could bring in potentially a major, a super major. I think that was money well spent from a shareholder's point of view, because what we have done now is move the Celtic Sea onto a different level, from a promotional level last year to a level this year where the industry can recognize that the 3D has added value by confirming potentially the size of these prospects, but most importantly, opening up new prospects from deep data that have never ever been explored before in the Celtic Sea. And this is what the majors want. They don't want to go back into an area that's already been drilled for shallow prospects. They want to see something new. So uniquely this year, amongst all the operators in the Celtic Sea, we offer the industry nearly 2,000 square kilometers of 3D, more 3D that's been shot in the whole Celtic Sea over 40 years. And it's a fantastic database for them to identify these new, deeper prospects over Kinsale and over Mizzen. Mizzen is high-risk frontier exploration. No getting away from that. Some analogies with Eastern Canada, high risk, but showing some indications of maybe gas in the basin from the seismic. Kinsale is vastly different. Kinsale has a producing gas field over it that has produced for 36 years to this day, from 14 wells, not one single workover, not one single drop of water produced, and 92-93% gas recovery. To put that in perspective for you, that is probably one of the best performing fields you'll ever see anywhere in the whole world. And yeah, it sits in the Celtic Sea. And underneath that is similar structures at depth that have never ever been appraised and explored by the industry, by the previous operator, for very good reasons, because he didn't want to damage his nice producing gas reservoir by drilling through it to maybe some overpressure deeper targets. Whereas now the situation is different because the field has declined. It's down to 19 million cubic feet a day, so the emphasis is to explore deeper, look for deeper potential beneath Kinsale, but the beauty about it is you have infrastructure sitting right on top of it to ship gas to shore if you find gas associated with the oil. So Kinsale is a vastly different proposition to Mizzen, but the two of them together, and to be fair, Barry Rowe, the three of them add the potential materiality that a major requires to make a significant investment in Celtic Sea exploration. He's got the recent drilling on Barry Rowe, a recent appraisal well, and now he's got a vast 3D seismic database from which he can actually see these prospects, which he could not see last year on the old legacy 2D data. So that's very important, if you like, kickstart to the Celtic Sea. More than a kickstart, it's shoving it up the ladder, halfway up the ladder, and we've got to get to the top of the ladder, and we've got to get a deal done by the end of the year. No, I say by the end of the year. I don't say by next month or 6 months. I would hope we would get a deal done by the end of the year to bring in a partner. We have all the momentum going forward on that now, and it's up to us to capitalise on it. And most importantly, we have the database. I'll skip over the technical slides again for you and just come to this slide, which is Celtic Sea, a maturing blue sky opportunity. Well, we've always said, and we continue to believe now, that the Celtic Sea remains a strong farm-out candidate for us. More so especially now because we have the 3D. The industry focus now has kind of waned a little bit on Barry Rowe. The excitement last year was Barry Rowe. There was a bit of disappointment amongst some parties maybe that, that it didn't progress. But now the focus has broadened out with the 3D that we have to look at the Celtic Sea in its entirety without just focusing on Barry Rowe. As I said, the Ukrainian-Russian standoff position is a very important driver, particularly for a country like Ireland. Ireland imports 92% of its gas through the interconnector from the UK. Ultimately, if there were supply problems in Europe, Ireland would be the worst affected because they're at the end of the chain. They have no LNG facility. Corrib will come on stream in maybe a year's time, but within 3 years it will still be producing less than 50% of Ireland's needs. And at its peak, it will only be producing 50% of Ireland's needs. Ireland imports all its oil. So from an energy point of view, Ireland is very, very exposed to anything that happens in Europe, both as a short-term event or as a longer-term event. And therefore, finding more gas and getting that gas into existing infrastructure in the Celtic Sea, which is an easier area to develop than the Atlantic margin. The Atlantic margin, as we know from Corrib, is much more sensitive because of geographically where it is and the impact on the environment. That's not saying that environment isn't important in the Celtic Sea. Of course it is, but there's been a history of 35, 36 years of gas exploration and production in the Celtic Sea. So there's a comfort feeling that with infrastructure there, which does not exist yet on the Atlantic margin. And I guess also the other key point to this is to tie your commercial deal to reality and not wild aspirations. And because we have a high equity levels in these licenses, we can afford to do a two-stage farm out, which means we can get cash back from our past costs, from our 3D, which is very important to become cash rich in this current climate on the AIM. You don't want to be going back to the market to raise money. And the second thing is we'll then have equity to farm out for a well program in 2016. But the most important thing is the first stage farm out gets a credible company, a major recognizable name into the license, which gives your licenses both industry credibility, but most important, market credibility. Until we get a third party in the license, the market will not believe that the Celtic Sea can deliver, because none of us have yet got that partner into the license. So this is our year for achieving that, basically, and giving the Celtic Sea credibility. So, in terms of news flow coming forward, of course, the Fumasaka well over the next couple of months is going to be an important news flow item. followed shortly after that by work on the onshore drilling program in Tendrara, and then in Ireland, obviously also the farm out process, the 3D results, hopefully the announcement of a partner before the end of the year, etc. One other thing I would say about Ireland as well, Fastnet took it on themselves about a month ago to put together a workshop in the Celtic Sea, a one-day workshop which is going to be held this Wednesday in Dublin. Nobody had ever done that before in Ireland for the Celtic Sea. They've done it for the Atlantic margin, they've never done it for Ireland. But we didn't know how it would perform, we didn't know who would come to it, but as of now there's nearly 30 companies, including BP, Shell, ExxonMobil, ConocoPhillips, Hess, Cairn, Cosmos, Ophir Energy, all coming to look at the Celtic Sea. So that's the first time since probably the last licensing round in the 80s that you've ever got a group of companies, super majors, together to look at the Celtic Sea, and only the Celtic Sea. Not looking at Atlantic margin, they're not looking at the UK, just the Celtic Sea. And it's the first time all the operators got together, Providence, Lansdowne, ourselves, Azer, the PGS-backed company, to basically work together to get the Celtic Sea farmed out as a group rather than individually competing against each other for farm outs. And that seems to be working very well. So in terms of where we see the future for Fastnet, the strategy has never changed. Our plan is an exit strategy for a trade sale. We know we're in a rough patch with share price, like a lot of companies. We can't influence share price, unfortunately. The only way we can influence our share price is by performing our work program and delivering our work program and bringing substantial partners together to create the opportunities to buy us out in success, and keeping cash in the bank, which is what we've done through the farm out process with SK, which has resulted in us having a minimal expenditure in what is a very expensive deep water well. And that is the way you have to do business as a small, lower cap exploration company. Thank you. Any questions?
There was a drill by Cairn Energy from Dry Drill.
From Dry.
I think it's just beside the block you've got there. What sort of, I think they had a reservoir risk something. What sort of, in what way does that affect what will be happening in?
We're looking at 2 to 3 different reservoir intervals in that whole lower Cretaceous package. They were looking at the base, and we're looking at the base, the middle, and the upper part of that lower Cretaceous. What they saw was negative, we know that, but we believe that they were too far up the slope, the shelf slope, because the issue was that if you've got a steeply dipping structure, if you come too far down dip, then you have to have a huge oil column, maybe 1,600 meters, which you don't see worldwide. So people tend to move their well to find out, the optimum sort of oil column that statistically you find in the Gulf of Mexico, etc. But the problem is when you don't know where the sand is, you can be too far up dip or too far down dip. So we believe, and our partners believe, that they were too far up dip, which was understandable in the way they had to locate the well. It does not provide a positive or a negative for Fumasaka. Obviously, it didn't find sand, which is negative, but the positive factor is it wasn't drilled in the same place that we're drilling. So I wouldn't see it as a complete read-through because it's a secondary target for us. But it's obviously it's not good news, but neither is it completely destroys the reservoir model for the Agadir Basin. There are 2 or 3 more wells to be drilled after this. Cosmos have a well to drill. Eventually Plains will drill a well as well. And Gulp and Janelle would drill the shallow carbonate. So there's a lot of well data that will come into play here to help de-risk reservoir distribution.
Also the CPR, which is like the other time I'm going to come out, because the one we seem to have the one in circulation at the moment is the old one. We had a CPR ready to go earlier this year,
but then it was too close to the well spud. It was in March, so we thought it would be crazy to put out a CPR. The problem was the CPR probably could have gone out literally on the well spud, but the advice was, well, the well is going to change everything anyway, so it was too late really, we thought, to put the CPR out. We can revise the CPR after the well results in a couple of months' time, and we thought that was probably the best way to do, because we'd be revising the CPR anyway after the well.
Do you have any communication with the Gulf Sands in Morocco?
We do talk through their drilling team, because we have been talking about sharing a rig, but not operationally about geology, just about rig sharing, land rig sharing.
Yeah,
They've just got a 3D in their block, and I think they've got a fourth well to drill shortly on the biogenic gas play. Yeah. They haven't, but Circle Oil have, yeah, but not Gulf Sands yet, as far as I know.
The reporting on the likelihood of doing this new well. They're not they're quite a way away from you, aren't they? They're on land.
Sorry, I didn't get that. The well they're drilling is a long way away from our Tendrara well.
Yes.
Yeah, and it's completely different geological play. They're looking at shallow biogenic gas.
Yes.
I don't know, about 16, 17, 1800 metres maybe. And we're looking at the Triassic, which is geologically older, much deeper, about 2600 metres.
What do you think the likelihood of it, or the other way, of these wells being able to draw the gas from these wells in the near future, because they've been pretty slow, I think.
Gulf Sands?
Gulf Sands.
I don't know enough about their drilling. What I do know, only from rumour, is that the wells didn't find as much gas as they anticipated for whatever reason, and therefore probably makes it very difficult for them to develop those 3 wells on its own without finding more gas, basically.
Yeah, they've only just got this 3D going on this.
Well, as I understand it, the 3 wells were drilled on 2D, and because the results weren't as good as they expected, then they worked on the 3D to see if they could drill a well then on a better seismic database and get more gas.
Right, but they haven't reported yet.
Well, I can't talk for Gulf Sands, I'm sorry. There's a guy behind you who's desperate to ask a question.
Yeah, Cut-Off Field said at the UK Investors Show that you didn't want to actually drill for Maslaka without actually concluding the farm out deal. And that show happened on the 5th, and he said that the only point that was holding it up now was for the finance minister to rubber stamp the deal, and it would normally take about 7 to 10 days.
Yeah.
Now we've gone past that.
Yeah.
And obviously you can't afford to pay 25% of the cash cost of the well. What's the reason for the delay?
Watch this space, that's all I can say. I can't say any more. I know something that you don't, but until the market does, I'm smiling, so don't worry. Well is the well, you won't hear anything about the well until...
When do you think that will be announced?
We've guided the market up to 3 months from March the 16th, and that's still the guideline, right? Up to 3 months from March the 16th.
How much is the cost per barrel, say, in Celtic Sea? It's like $10, $15. What's the industry rate for it?
In terms of net back profit, you mean? It's a little bit more. Yeah, we said 1 barrel of oil is worth about 13 in Algeria and 7 in Nigeria. It's probably about 1.5 in the Celtic Sea is equivalent. So slightly more than Morocco, but it depends whether this sort of high rate profit tax kicks in Ireland if you find enough of it, which of course we will. But,
And is that, Sorry, Providence have been waiting for nearly a year and a half now for a farming. And even at $100 bar commercial for WTI, Brent is at $180.
Yeah.
Why is, in your opinion, is there such a delay or lack of news flow in that area?
You shouldn't ask me questions like that. I would try and look at it objectively. Obviously, I know the project very well. It's from pre-Barry Road because it was Seven Heads Oil. I think the issue is making sure you understand. You may feel that you've proved up a huge volume of oil, right? But it's not what you think. It's what the industry thinks when they look at the data. And the industry, when they look at a development project of the size that Barry Road potentially could be, they expect to see a certain level of advancement in the de-risking of the project. And that's probably more than just one appraisal well. So I would say a little bit of a disconnect between expectations and the reality. And that's very important for doing a deal. If you get too disconnected, you're never going to do a deal, particularly with a major. Now, the market may believe something, but a major is going to pull it apart and decide. I mean, no major, as far as I know, has walked away from the concept of Barry Road. It's just that people think differently of how it should be moved forward and at what pace and at what level of promote, maybe.
One final question.
Okay. Oh.
So, in case of tender, there was, I mean, initially, you didn't think of doing any kind of a farmhouse or anything like that?
Initially, no, but because we are kind of restructuring things a little bit, and that's all I can say, is that we then have an opportunity perhaps to bring in an additional partner. And the only reason why we would do that is with an additional partner, it would be the prudent thing to do in the current climate. We want to spend the minimum amount of money on our share of exploration. But more importantly, we see Tendrara, now that we've completed 12 months of work, as a huge opportunity to monetize at a very early stage, unlike the exploration projects. But in order to do that, we probably need to drill 2 or 3 wells. And if we can get a deal with a partner that will drill the 2nd and 3rd well and bring in a rig and drill everything back to back, then it's win-win for everybody, and particularly for our shareholders, because we reduce our cost burden, but most importantly, we accelerate our ability to monetize and exit.
What percentage do you think you're funding out?
Oh, well, how much do you want? I think that's too early to say. I think we would be comfortable, you know, we're not going to farm out to the stage where we drop to 10% or anything like that. I would say, you know, ideally we'd be happy around 25% maybe net equity to us, because it's such a big project that's a huge value still to us, and it would have been de-risked through the drilling. Now I've got to go.